Let's dig in a little bit to the slowness of this cycle versus others. From our work is like,
so in terms of where are we in the cycle? Now,
when do you think it finishes, by the way? My view is it's been extended. Normally would have finished sometime this end of this year, but it feels like it's going to push out into.
On this channel, our mission is life-changing returns. So we've been covering some of the highest quality assets on the planet. We look at the fundamentals and then we think about price action. I don't want to be redundant in every video, but here's a refresher. Here's the crypto total market cap excluding the top 10 dominance. It's been cratering ever since the last bull market of 2021. Here's a chart of ICP cratering, doing the exact same pattern. Here's a chart of PancakeSwap doing the exact same pattern. Here's the chart of Chainlink. It's also down. Ever since Chainlink announced their reserve to buy back the Chainlink token with revenues, it did a move like this, which is incredibly bullish for it. But the truth is, it's suppressed. It's been down since the last bull market. There's been some seriously bullish developments for it, especially for the tokenomics, especially for the buying pressure. So we're seeing it start to outperform. These are ridiculously bullish assets. We're going to cover why they're bullish. But again, anyone who understands the fundamentals of these assets would say they've been absolutely suppressed. Chainlink's nowhere near its old all-time high. The fundamentals are probably 1,000 times better now than they were at its old all-time high. So we have to look at the liquidity situation. We have to look at what's actually moving these assets. Here's the United States ISM Purchasing Managers Index, cratering ever since the top of the last bull market of 2021. This is essentially the real economy. The correlations are just undeniable. Here's a chart of interest rates. If you flip it upside down, it looks exactly like ICP, it looks exactly like altcoins, it looks exactly like the ISM or the real economy. Interest rates are the oxygen of the financial system. They've been stifling growth. So we've been staying on top of interest rates. And what we've seen recently, and when we covered this in the last video, was how ridiculously bullish these new developments are. Look at the movement of the 10-year bond yield. It's come down. When that comes down, liquidity just rushes into markets, into the real estate market. People can refinance their homes. Finally, people take on a massive amount of debt. That's why it's the oxygen of the financial system. It's moved down. Now it's moving back up. So that's a little scary, but it did make a big move down. It's at 4%. So that's the direction of interest rates. Again, when interest rates come down, altcoins skyrocket. Remember during the pandemic when it was the worst economy the world had ever seen and Bitcoin crashed to $3,000, and then they lowered interest rates, they printed money, and it went from 3,000 to 69,000. That's how manipulated these markets can be. And that's how correlated liquid altcoins are to the macroeconomic environment and money printing. So we've been staying on top of what Raoul Pal has been saying. He studies money flows, he studies liquidity, he studies the impact on altcoins. He just gave a brand new update. He did an interview with someone who he listens to for advice on where liquidity is heading. This is his most recent outlook on altcoins, on liquidity, what we can expect going forward, the timeline of a potential bull market. Brand new, as accurate as you can possibly get if you've been following along with what he's been saying about liquidity.
Let's dig in a little bit to the slowness of this cycle versus others. From our work is like, normally the liquidity cycle peaks around the business cycle peak. You know, they're all related. And the business cycle has been super low. If you look at the ISM, it's been below 50. And the strongest correlation to that is rates have been too high for too long. And that has kept the ISM lower than expected, which means it feels like it's elongated the liquidity cycle. So that's one factor that I'm looking at. The other one is the fact that they've been shoving everything into the bills market and not refining, you know, in, let's say, the 5-year sector, that's kept this cyclicality. And I don't know if that structure is changing things because it requires ongoing liquidity as opposed to cyclical liquidity. So firstly, the business cycle and interest rates, and then, you know, whether the structure of where they've been issuing makes a difference.
Yeah, but I think the first thing is we don't seem to have a business cycle. And if you look at almost any economy since the COVID crisis, everything's kind of flatlined. So there's no obvious business cycle around. And, you know, we can conjecture as to why that may be. Is it because fiscal policy is dominant? Whatever. But the fact is that there's none.
So there is no business cycle. Raoul Pal just reiterated what we just said. He's surprised that this cycle is taking longer than usual. Because by now, in the 4-year Bitcoin halving cycle, normally we get a rush of liquidity, we get interest rates low, and we get a massive pump in assets and we get that alt season, we're not seeing it at all because there's no business cycle, there's no rate cutting. What the government has had to do because rates have been so high is issue debt in shorter bond yield terms. Like they're issuing more 1-year bonds, more 2-year bonds, less 10-year bonds because they don't want to flood the market with 10-year bonds. That would increase the rate even higher. So that's what Raoul Pal is talking about. That is exactly why your altcoins have not pumped as much as you would have expected. That is exactly why. High rates, low liquidity. This is unlike any other crypto cycle on the planet. So no business cycle. I don't care if you're in the real estate market, the biotechnology market, anything emerging, anything early stage, ICP, Chainlink, nothing is going to pump massively in this environment. But what comes next?
So in terms of where are we in the cycle, this is our liquidity cycle, which goes right back to the 1960s. And the sine wave there is something that we fitted back about 20 years ago in the year 2000 to show you've got this 5 to 6 year cycle, which is, I think, different to the way that you see it in terms of a 4-year cycle. But this is based on an analysis of this liquidity data. Now, how early or late are we in this cycle? Well, you can see that this is the normal cycle, the dotted black line. The low point is the trough of the cycle. And the red line is where we are now. So this looks late. I mean, we've got to accept that. We're late in the cycle. It doesn't mean it's about to end, but we've got to know we're nearer the end than we are at the beginning, and that's clearly an important factor. Now,
when do you think it finishes? By the way, my view is it's been extended. It normally would have finished sometime this end of this year, but it feels like it's going to push out into Q2 next year.
Yeah, I mean that's almost exactly where, if I go back to looking at this cycle, that's where we would sort of suggest it's probably going to inflect sometime around about early 2026.
So early to middle 2026, that's when the liquidity cycle peaks. That is Raoul Pal's prediction for the end of the crypto alt season. Because the way this always works is the highest quality, safest assets on the planet move first. So liquidity picks up. It moves into the system. The big cap tech assets of the world start to pump. More liquidity moves into the system. They start to lower interest rates. Riskier assets start to pump. More speculative assets start to pump. Assets the market doesn't understand start to pump. And so we're not even at that stage really yet. We started to see some of these crypto assets start to pump. Good news is good news again. Chainlink starting to do okay. So we're starting to see some green shoots in these assets. ICP's price has stabilized. Now, ICP is one of the least understood assets on the planet. Again, I would not expect it to skyrocket at this stage in the cycle. Safest assets move first. This chart shows how gold moves first, then Bitcoin. They're correlated. As the liquidity cycle progresses, again, we see a flight to safety. Then we see the more undiscovered assets move like Bitcoin. So Bitcoin follows gold. Bitcoin also follows the money supply. It's been lagging as well, right? Bitcoin investors are disappointed because since the top of the last bull market, with BlackRock's help, the top of the last bull market was 69K. Now we're like 116K or something like that. So really, over the last 4 years, Bitcoin's been suppressed, even with BlackRock's help. So it just speaks to how suppressed this cycle is. That's what Raoul Pal is talking about. But what both of these guys agree on is that the liquidity cycle ends in early to mid 2026. So that's what we're lining up for. We have Jerome Powell leaving office in May of 2026. We have Trump. We have Bessent. We have the government doing everything they possibly can to lower interest rates. They want to lower interest rates so that they can refinance trillions of dollars of debt. Well, guess what? The entire world wants to refinance trillions of dollars of debt. If you're in real estate at all, commercial real estate or any type of real estate, you want to refinance. Everyone is waiting for that moment. So everything is lining up for 2026 to kind of be the crescendo of the liquidity cycle, and we're starting to see moves. ICP is poking its head above $5. Chainlink is starting to move. Other small cap assets we cover are starting to move. Airdrom's doing well. We've done really well in some of these BitTensor subnets, but it's really just a matter of time. We're slowly moving our way towards that target, but that is Raoul Pal's target. Now, they may need an excuse to lower interest rates, and I've been saying how we could get a deflationary crash. Something could break in the financial system. Some bank could go under like Silicon Valley Bank did, which spurred a crypto rally previously. Some commercial real estate company could have major problems. And so normally we get a massive crash followed by a massive boost in liquidity. Everything is lining up. Could we get a crash in the meantime? Absolutely. But the liquidity cycle peaks in around the middle, Q2 of 2026. We should get a massive bull run in these assets by then. So if you can just wait and ride through the volatility, you'll get rewarded by typical late cycle liquidity. That's when the world's going to wake up to the highest quality assets, just like Amazon took years to be discovered, and its price action meant absolutely nothing. The macro environment became favorable, the revenue grew, the fundamentals came to light, and the best quality assets made their way out of the wasteland of early stage technology. So the highest quality assets on the planet are going to absolutely break through this crypto junkyard, and they're going to provide those life-changing returns. This happens every single time, and it's always based on adoption, it's based on revenue, it's based on fundamentals. Here are the top projects by developer activity over the last 30 days. This is from Gate.io, which is one of the biggest crypto platforms. ICP is the number one, 847. Guess what's number two? Chainlink, beating Cardano, Filecoin, Optimism, Kusama, Polkadot, Ethereum, and DeepBook. So ICP is the number one for Web3 developers, but if the current vibers on Caffeine AI were also counted, those dev numbers would already be many times higher. So in 5.5 weeks, Caffeine is going to be generally available to everyone to go on and create whatever application you want. There's lots of cool things we can do as a community, and I'm going to talk more about that, but the point is, fundamentals of these assets, these two assets we're covering in this video, they've never been better. Ridiculously bullish adoption and building. The more building and developer activity, the more adoption, the more potential future revenue. So that's what we're seeing with ICP. That's what we're seeing with Chainlink. Now, Chainlink just reached a new all-time high in total value secured, $100 billion today, trillions next. Polymarket just partnered with Chainlink. Every single day they get a massive partnership. The best quality assets on the planet will emerge from the crypto wasteland once the macroeconomic environment lines up and is favorable. And according to Raoul Pal, that's going to be in Q2 2026. Remember, Jerome Powell leaves in May of 2026. Remember, the president is going to get control of the people that make interest rate decisions. Guess what they're going to do? They're going to flood the system with liquidity. So we're heading towards the end of a liquidity cycle that's been years in the making. It's been delayed, but we're getting there. And so we're going to continue to stay on top of this space. We're after life-changing returns. And if we understand the price action and we understand the fundamentals and we can see into the future, we can make life-changing returns. Thank you for watching. Lots coming.